Welcome to Networking with Nathaniel, a podcast that I started a long time ago where I get to talk to entrepreneurs, real estate investors, business owners that are doing some pretty exciting things. We've had some great conversations in the past, and I'm looking forward to our conversation today. This is a topic that we haven't talked a whole lot about on Networking with Nathaniel, and my guest today is very well versed in private money lending in real estate and what all that entails, the kinds of returns you can get, the way you're secured in each deals, and what it all looks like from a actual lender standpoint and from a borrower standpoint as well. Our guest today is a husband, a father of two beautiful young girls. And so that keeps him busy as well. And he's been investing in real estate for a little bit now. So without too much teasers there, we're going to bring up our guest today, Mr. Jon Chan. Was the audio on that intro was kind of quiet, wasn't it?
It was okay for me.
Okay, sweet.
Yeah,
How you doing today?
I'm doing well. How about yourself?
I'm doing very well. As we were just, we were talking, today is an odd day for us. We just got back late last night. We were supposed to be back Monday night, but winter travel, things tend to get flip-flopped around. So our flight got canceled on Monday, and so we pivoted and did some other things. But I appreciate you being here, and I'm excited to jump into the conversation with the private money lending and all that entails. But what's kind of keeping you busy on a day-to-day basis?
So right now, the biggest thing is I'm trying to scale my lending business.
Mm,
Been able to do pretty well. I mean, learned a lot over the past year, but realized that I was only shooting for home runs and really needed the base hits to kind of cover
mm.
the gaps. So it's been getting organized, getting the systems in place so that we can scale and do it well in the lending space.
Yeah. I love that you said that about the home runs. That's something that we tend to do as well. Like, we're just looking for those ones that are almost no-brainers, like, how can we lose on this? Um, and, we're doing it from the standpoint of we are involving other people's money, so we wanna mitigate the risk as much as possible. When you say scale your lending business, is this your personal money that you're using as lending, or is this other people that you've kind of raised capital from and you go and allocate their resources and deals that you see fit?
So at first, it started off just helping my mom out because she wanted to retire. So took all of her money in the old retirement accounts, put into self-directed, and then started looking for different types of opportunities. I looked at everything, not just lending,
Mm,
um, but with being a landlord and not really enjoying that lifestyle, did not want to put her through that. So I looked into lending. I went through all the capital raising and the private money lending videos in the Sub2 vault, and just kind of went at it. Also the Gator stuff as well, but um, that's how it started. And then saw that my mom was making a lot of money without having to do any work, so decided to put my own money in there. And
mm,
then about a year ago, went back to Virginia, where I'm originally from, to hang out with friends at a wedding. And a childhood friend of mine looked at me and said, "Yeah, I see what you're doing on social media, and I want to get involved, but I don't want to do the work, and I don't want to go through all the education." So I said, "No problem. Like I can help you." So took his money and essentially became the borrower for him, but realized that my friends could be making a lot more money if they came in on lending opportunities with me. So just started exploring that option. And really, at first, it was trying to find as many people as possible that wanted to make some money on the side, but not really do a ton of
mm.
extra work. But we have really pared it down to just friends and family at the moment.
Okay. Yeah, that's all. I mean, that's where most people advise to start with anyway. It's kind of the easiest conversations to have. So you've done well enough to where your friends and your family have trusted you at this point. How long have you been doing this now?
So about a year. So I think the first deal that we funded, at least for my mom, was December of not last year, but the year before. So
Okay.
2023. I
Okay.
had been exploring lending since I think November, just making sure I did it the proper way.
Yeah.
Yeah.
And then, that's something that I mentioned at the in the kind of introduction here is, the proper way how you're securing these people, especially being friends and family. Well, I guess it doesn't matter if they're friends and family or not. You've told these people that you would secure them. How are you going about securing, the lenders on the side of the deal?
Yeah, so making sure that they are the ones that are getting the deed and all the security documents are in their name. I just come in as a JV partner on the back
Okay.
end. But yeah, I mean, it's just something that I learned from being an investor myself. When I first had I had three private money lending, private money lenders, and they were just friends of mine that knew me. And this was probably like 3 years ago, and I secured them with a promissory note. And then as I was going through all of the trainings on how to be a good borrower, realized that they were not secured at all. So had to go back and make sure that they were secured against actual tangible property that had enough equity. And that's where I learned that this is how I make sure that my lenders are protected, by making sure that this property itself has enough equity to cover their loan plus foreclosure costs if it ever came to that. Um,
Okay.
and then taking these principles and making sure that, because these are friends and family, I still see them on a regular basis. I want to make sure they're protected. So transferring and making sure that all those security documents that I had to give up are given to my lending partners.
You mentioned there having enough equity, plus the costs of what a foreclosure would be if
Yeah.
that route had to go. That's not
Mhm.
something that you hear people say very often. You just say, "Oh, is there enough equity spread in there?" What's the typical spread you're looking for, like amount of equity to have in a deal that would make sure that if things were to go south, they can at least sell this thing or do whatever they want to recoup their principal back?
Yeah, so it depends on the total loan to value. So if we're looking at total loan, all positions, whether it's first, second, third, right? When you're in first position, you're looking at probably about 80%. But as you go deeper into it, you probably want a lower loan to value, 50, 60%
Mm,
total loan to value, because first position always has extra fees and foreclosure costs on top of that. But for my friends and family, when they were using me as a borrower, I just made sure I put them at 80%, because I knew that average cost to sell the property is about 10% of the market value. So I knew that if I just gave them 80% loan to value, then 10% would go to all the fees, and then the remaining part would be the buffer, and they wouldn't have to go through foreclosure.
mhm. Okay. And because you're a JV partner on these, does that
Mhm.
skip the foreclosure process?
No, so the JV partner, it just means that I'm in the deal till the end. Again, these are friends and
Okay.
family that aren't in the industry, and so the JV partner just helps me pay for my costs as well as my team, and also just ensures that if anything were to go wrong with the borrower, I'm still stuck in this to make sure that
Oh, right, right.
I do the foreclosure, I run through everything, and they're getting their money back. And so that's a big reason why I'm very, very picky, like very, very, very picky with the borrowers that I work with, at least with these types of opportunities, because I don't want to go through all that headache.
Yeah.
I want people to do what they say they're going to do, and then everyone makes money and everyone's happy.
Yeah. And you as much as you try to mitigate the risks as much as possible, like there are things that happen. So it's nice that they know that you're on their side, right, as the JV partner that's going to walk them through the process. Have you had to do any foreclosures to this point?
So right now I'm going through one foreclosure, and it's for my
Okay.
mom. Um, but that has been a decent struggle, just finding a good attorney that would handle it.
Mm,
But I know that there's additional collateral, so I know that once the foreclosure happens, my mom's going to make a lot more money that way. So I look at it like it's a learning experience, and it's not a ton of money, luckily. But yeah, so one now, which is a big reason why I'm pivoting to safer loans.
Yeah, so what are the types of deals that you're kind of typically looking for? I know you mentioned the 80% loan to value. Like, are these fix and flippers that are just going in and they're buying something at 70% plus some rehab? What does that all look like?
Yeah, so at first it was gap loans, second position, because I mean I was attracted by the returns like most people would be,
Mm.
and luckily, a large majority of them, all but one, have turned out really well, and we've made a lot of money. But I've kind of toned that down to first position only, and I transitioned from second position gap to first position only, where there's this great connector. She's found a great team, and so I kind of leveraged her experience, their willingness to be open and transparent, to bring in friends and family, first position loans, and now it's pivoting a little bit more to becoming first position only, to 75%, as is value of the asset itself.
Okay. That's a little bit, well, I guess that's dependent on if it's a little bit easier to underwrite or not, but it seems like that would make it a little bit easier to underwrite because you don't have to factor in what the repair costs are gonna be as much.
Yeah, I mean, the biggest problem was I got spoiled by this one group. Like, they have excellent communication. So far, they have 100% track record, and they offer really good rates. So I spent months and endless hours talking to people, connecting with people, trying to find that group, and that's what I was talking about when when we mentioned home runs. Just trying to find
Mm.
another diamond in the rough. But it's been very challenging doing that, and so. Going towards a more asset based lending approach, I think will help scale, because it's less about the borrower. It's more about, am I underwriting this properly? And then you can do a lot more deals this way too.
Mhm. Yeah, okay. Um, it sounds like you've got, some capital ready to deploy. Are you, are you looking in specific areas? I know you got the map behind you. I'm guessing that part over your top left is not really being looked at so much, the Africa
Yeah.
and Europe and Asia, but are there parts
Right.
of the country that you're more keen on, or parts that you stay away from?
Yeah. So right now, I'm focused only on Virginia. Just going through this foreclosure in Washington State has kind of opened my eyes a lot to, okay, well, I've gotten lucky, great. But if anything were to happen and I were to do this at scale, I can't go and try to find a team in Washington and Ohio and Indiana.
Mm.
So why not just focus on one state that has a huge population, lots of deals, lots of opportunity. Just get really good at that one thing, and then open up, single state by state versus trying to do the entire U.S., which sounds cool, but it's a big headache.
Yeah, we can attest to that in a little sense, is that like we went nationwide last year and we've
Mm,
had success doing it, but each time you enter into a new market, it's like, all right, new contractors, new property managers, new you know, city and local municipality codes and
yeah.
things that you got to try to figure out. And I like what you're doing as far as the just niching down to one state. And you could probably even go even deeper and just go to one city or something. Like, I know people that only lend in Atlanta, Georgia. Like, that's all we
Hmm.
do,
Yeah.
because Atlanta's big enough of a city. And just when people decide that they want to get lending in Atlanta, they know exactly who to go to. Oh, these are the ones that
Right.
lend in Atlanta, Georgia. So John's going to be the guy to get your deals funded in Virginia.
Mhm.
As far as underwriting goes, are you doing appraisals? Like, what does that kind of process look like from me bringing you a deal saying, "Hey, John, I want to get funded," to you saying, "Yeah, this is a deal we can move forward with."
So the group that you mentioned who are working in Atlanta, we've actually partnered with them, and we're
Okay.
taking their exact model. Um, And so no appraisals. We're just going to, it's going to be a very quick process, very little paperwork, because Abraham's a beast at underwriting. And so we're just going to take his approach and apply it to Virginia. And so it's going to be quick turnarounds. And that's the main thing, is going to be speed at which we can fund these deals. So we're not doing appraisals.
Yeah. Yeah, that's awesome. And then so if you're not doing an appraisal, how are you going about figuring out what your ARV, what your as is value is? The as is value is something that I've uh, it's a little bit challenging sometimes. Like a lot of
Mm-hmm.
times you can see what the ARV is, but because there's plenty of comps in a neighborhood, but then working back to what this thing is actually worth today, that can be a challenge for some people.
Yeah, and it's still a challenge for me too. Underwriting has not been, even though I'm a CPA, like underwriting has not been my biggest strength. And so what I've done is I've just taken that off my plate, and I've brought in a partner who can handle that, who enjoys it and is way better at it than I am. So
Mm,
we're just going to take Abraham's approach and apply it to Virginia. And that's what we plan to do is, you know, when I got into real estate, it was everyone, which is unfair, right? Everyone thinks that I'm doing everything, and I know everything, and I don't. Like I really only know that I really have based my business on relying on other people who are way more knowledgeable and
mm.
experienced than I am, and kind of just going based off of their advice, whether good or bad. And so that's the same thing that I'm doing now. I'm finding someone who has a proven model that has a lot of success and does things the right way, and just bringing that person and that team value so that we can all grow together.
I love it. Yeah, we we talked about this a couple episodes ago with Michael Matsukanyan, and we brought up the comparing and despairing, from a negative standpoint. Like you can compare yourself with other people and you can get discouraged, like, oh, dude, they're better than I am, all these things. But you're comparing yourself to somebody else and going, how can I take what they're doing and applying it to my business so I can do better for myself, for my borrowers, for my lenders, and taking their kind of proven model and working backwards from there. So I love that. And you mentioned the bringing other people in that m- you know maybe you said that they know more than you. Maybe they don't even know more than you, they just have more time or desire to do the thing that you're not wanting or capable or good at doing, and leveraging their time and their resources. That's how we're going to scale, um, faster and farther, is together. It's something that I still struggle with, like offloading things. There's things that I'm not even good at that I just don't want to give up, but you got to do it. You got to let go.
Yeah.
That way you free yourself up to go do bigger and better things, higher value kind of activities.
Yeah, everyone that I've spoken to that's way more successful than I am have said the same thing. Like you can find people that do these things way better than you, and your company, your growth is going to just 10x because of it.
Hmm. Yeah, I had a day with Pace last week. We were talking about a little bit, and that was, you see him on social media and you talk to him on Zooms, and he talks about these things about bringing people in and delegating. And when you see it, it's just like, oh, it's freed him up to do all the things that he is really super gifted at. He just
Right.
is able to flip switches on because he doesn't have to worry about all these other things that are going on, because he's brought people in that are either as capable or more capable than he is. And it's just incredible to watch. And, you know, in other people's lives and our own, like, oh, okay, that's why we brought these people on, is because they're going and doing that every day. They're going to get so much better at that than I am so fast, and it's going to allow me to go get better at the things that I need to be, to bring more opportunities for these people. And so I love that. um I'm not sure who that is. Vasya, let's go. Well, you mentioned being a CPA, and I know that that was something that we discussed a little bit prior. Is that something that you're still doing, or are you full time in real estate now?
So this is actually pretty funny. I went to this thing called Jetson Capital a few weeks ago in Vegas, and my intention was to go and raise money for RV parks, because I really want to get into RV parks. These larger assets, like single family homes are great, but I would like to move into something bigger. And the biggest thing that was holding me back is not really the amount of unknowns. So I figured if I went
Mm.
there and I talked to a bunch of ultra wealthy people to get them interested in these RV park opportunities, then I could learn more. Turns out I met this one group who father daughter duo who the father's been in a trader for 44 years, and his daughter's a compliance attorney who just does capital raising, and they were building what's called a quantitative cash management fund. It's just a specific type of hedge fund, and I kind of just met them passing, and because of we've had multiple conversations, and because of it, they're bringing me on as a CFO, as their CFO, um,
Okay.
and so not in my like wildest dreams did I ever think I'd be, first of all, tied to a hedge fund or be a CFO. But it they're taking the cool thing about this is they're taking this guy's 44 years of experience, and they're creating a neural network and an AI bot to help with decision making, calculations,
Mm.
and training on and off. And so a super long answer to get to, I'm actually going back to being a CPA.
Yeah, interesting. I think,
Yeah.
that's a testament to being open to opportunities and seeing opportunities when they present themselves, right? You had this one thing that you were going in for, and an opportunity presented itself, and now you're going to be part of something that sounds pretty, um, when you said it, quantitative,
Cash
fund management.
management fund.
Yeah,
Yeah. I had
cash
to
man. Yeah,
go.
like,
Yeah, they asked they said it to me. It's like, I don't even know what that means. Like, what does that mean? I just learned what a
yeah,
hedge fund was yesterday. So what is this thing? And
yeah.
so it's been a lot of chat GPT and financial modeling for hedge funds and all these different things. But yeah, it's been a pretty cool experience so far.
Yeah. Yeah, that's dope. That's exciting. I'm excited for you. A new, like, venture for you to go on. I'm sure you're gonna you're gonna do amazing just like you've done and all the things that you've done so far.
I hope so.
You, yeah, you mentioned something early on about not liking being a landlord. Would you tell me more about that? That's interesting.
Yeah. So, when I got into this business, I enjoyed being a landlord in the fact that, in the sense that, I was getting to know the people, because my dad has 6 properties that I kind of claim as my own, because I handle everything from A to Z on all these properties. And, being in the Northern Virginia area, I got to meet a lot of people, bring them in, and handle a lot of the management. And just, it was actually kind of fun for me. And,
Mm.
um, because I knew that I was going to take care of these people better than any management company would. So then I go out and I start buying my own properties, and none of them are local because none of them would cash flow. So they're all like Huntsville, Chattanooga, Baltimore,
Mm.
and I have to bring in property management companies to handle these things. And I just don't feel like they. Well, it really became apparent to me that they were not managing the properties the way that I wanted them to be managed, because so one of them had a septic tank, and a tree uh, grew roots into the septic tank, destroyed it. So I had to replace the septic tank. Fine, no problem. So then I asked, okay, well, what's causing this problem? They said, oh, well, this tree. So I said, okay, well, then can we remove this tree? And they said, yeah. So they'll go and get quotes, and they gave me a bunch of quotes, and it came back to like $2,300. And back in Northern Virginia, where it's a very expensive market, I could get a massive tree cut down for 900, and they're telling me that this tree costs 2,300 to cut down. So I had my VA go in and get a bunch of quotes, and I was able to save $1,000 that way.
Whoa.
And so just realize that PMs they do the job, right? But they just do the job. They don't do it well.
Yeah.
And unless I'm there or I have someone on my team actively managing the property management companies, um, there it's just not worth it to me. And they don't cash flow enough for me to bring in someone to be an asset manager. So at this point, like, unless I have more active income coming in, it just doesn't make sense for me to hold 30 single family homes.
Yeah, that's interesting what you said. Like, they're just gonna go get one quote, or a couple quotes from people that they've got in their network, and they're not gonna necessarily be the best because they don't really care. They just want to get the thing done and get you off their back so they can go
Yeah.
back to, sitting on the couch. No, I'm just kidding. But kind of,
Yeah.
yeah. They just want to
Yeah,
get the thing done. Yeah.
exactly.
Okay. So, I totally can understand where you're coming from. It sounds like you in a sense like being the actual landlord because of the relationship you're able to build and the product that you're able to provide for these people, but having to manage the managers is not in your interest.
Yeah, I mean, if I had the time to manage 100, locally, and they all cash flow really well, I would love it. Be happy. Like
Yeah.
you get to drive, go see the property and all that, but um, not long distance so much, unless I
Yeah.
had in-house property management.
And so it sounds like kind of been a catalyst for you wanting to go down the RV park route. In a sense, like you'll have a in-house manager of the park or multiple. How far are you into this RV park kind of adventure now?
So I've it's come down to just evaluating, and I have like subscription agreements and paperwork that I've submitted to Anderson Advisors, my quote unquote legal team, to review. They
Okay.
still haven't gotten back to me, but uh, as soon as everything checks out, like that's I plan to place money there. I mean, I've gone through and I've studied him. I spent hours preparing to answer. ChatGPT is amazing. I just said, "Oh, what would a wealthy person ask about an RV park, opportunity?" And so it gave me a list of like 3 pages of questions, and I went through every single question, answered them, and then for once I didn't, I would ask the opportunity owners. And so I've studied pretty extensively, at least their opportunities. Um, so I've done a lot of research. I think
Yeah.
is the answer to that one.
Yeah, that's awesome. And is this going to be in Virginia as well?
No, so I plan to just be a limited partner for now
Okay.
in as many of these opportunities as possible. Because even as a limited partner, you're going to cash flow way better than you are with a single family home, and you have a team of experts that will handle all the management. And it's in their best interest to make sure that the properties are well maintained, taken care of,
Mhm.
and running a high level. And yeah, I mean that's the capacity at which I want to own property at the moment, is to be a limited partner.
Yeah, it sounds like it's kind of once you do the initial getting into the deal, it's going to be pretty low maintenance for you.
Yeah, just collect your distributions.
Yeah, walk to the mailbox. No, I'm just
Yeah,
kidding.
exactly.
Yeah.
Yeah.
Well, so do you have like a time frame that you think your first one's gonna be kinda executed on? I like to hold you to
Yeah.
it on networking with Nathaniel.
This year, yeah, this year for sure.
Okay.
So I had 5 of my properties that I had put up for sale under contract, and so my intention was to take a portion of that money and put it in the RV park, which is going to be end of March. But that looks like it's going to fall through. So I'm
Oh,
hoping that by the summer I get to place some money into to an RV park. That is the
okay.
goal. Yeah,
Yeah. And you already, you said this Anderson, I forget what
yeah. Anderson
Anderson
Advisors.
company.
Yeah,
Is that a op are they that's your attorney?
yeah, yeah.
Okay, okay. You already have an operator or operators set aside or in
Yeah,
mind?
so I have 2 sets of operators that are actually 3 sets of operators that I really like. But one of them just has experience with selling to private equity and selling to a REIT. And so that's why it looks like I'm trending more towards like the family office world and Wall Street. So
Mhm.
being able to have an excuse to ask questions from them is ideal.
Yeah. Yeah, that's awesome. I didn't ask you with your family and friends that they're doing these lending on, what is the timetable and what kind of returns are they typically looking to get on these deals?
Yeah, so for them, it is typically 6 months or less, and these are
Okay.
flat rate returns as of right now. And so it's a 15% flat rate total return. And then for my friends and family, they're getting 16% annualized, so it's 8% flat. And then for me and my team, we're getting 7% flat. just for finding the opportunities, and then covering the back end in case anything does happen.
I feel like I caught it, but can you yeah, I feel like it made sense. It's
Yeah.
15 total, and then you broke it
Mhm.
down.
Yeah. So
Okay.
it's pretty much divided because of where
Yeah.
the opportunities are coming from.
Okay. And, so I just wanna make sure that anybody that's out there listening, let's say you borrowed the money for 6 months, you borrowed $100,000. What would I owe you at 6 months?
So if you were the borrower, you would owe 115,000, and then so of that 15,000, 8,000 goes to my lending partner or my co-lender, and then the 7% will go to myself and my team.
Okay. And is that there are different ways the lenders like to be paid, is from what I've
Yeah.
come is it sounds like you guys just wait the 6 months and you get a big chunk of money at the end.
Yep,
Or do that.
exactly. Yeah,
Okay.
exactly how it happens. Now, I do have a couple other borrowers that I've been waiting for. They've been affected, or one of them has been affected by the California
Mhm.
wildfires. But that structure is going to be a little bit different, where I'm able to give my friends and family a higher rate of return, and also monthly interest-only payments, because that's like essentially the connector in that, or the
Okay.
whatever they call it. Yeah.
Yeah, that's for, anybody that's listening now or in the future goes that's interested in being a lender, is that I don't want to say that you have all the cards, but a couple of the cards that you have are what how long do I want you to have my money? My fingers down here.
Yeah. Yeah.
What am I going to get as a return? And then, as I asked John right now, are you waiting till the end and you're just getting a big chunk, or would you like to have some like monthly residual checks coming in? So they could decide, and I'll just use 12% just for easier numbers, that like, they're going to get 1% each month until the loan is paid off, right? And since it's a flat rate, if there's a left of the total interest at the end, then they would get a chunk at that extra chunk at the end. So they could get, using that $100,000 mark. And correct me if I'm wrong, John, but like, I was going to borrow money for 6 months. I was going to borrow $100,000. I'm going to pay you $1,000 a month for 6 months, and then at the end, I'm going to pay you $109,000 back. That's that leftover 9% of the
Uh,
50.
well, I guess it
Oh,
depends on the
excuse me. It would
structure.
be, yeah, 6% because I used 12% on
Yeah.
my thing. Yeah, yeah, yeah.
Yeah. So it really depends on the structure. And yeah, so that is actually the model that I'm moving towards, because right now, again, we have been spoiled by this one crew, and I
Yeah.
don't know how long that's going to last. Um, so yeah, but I'd much rather get the interest only payments throughout
Mhm.
the life of the loan, even though that's going to bring the rate down. But again, moving towards lower risk opportunities. And I mean, the operation that I have right now is just for friends and family. I'm not trying to procure other lending partners, because this is really for them. They get to benefit from this work. But at some point, we will expand and offer different options for people.
Yeah, that was actually gonna be my next question. It doesn't sound like it's on the horizon, but I don't wanna put words in your mouth. Is there a time frame that you have that you're gonna say, "All right, I've kind of gotten the kinks out of this machine in a sense. It's time to open it up to outside of friends and family."
Yeah, so it is really going to start this year, uh, because I don't really enjoy inserting myself into these
Mhm.
opportunities this way. But I just have to make sure that my team gets paid, and software gets paid for as well. So that's why I'm moving towards that model in Virginia,
Mhm.
because I can do 10, 20, $30 million in lending opportunities, and they're safer, it's easier to scale, and you're not getting flat rates, you're getting this interest only payments throughout the life of the loan.
Yeah. Yeah, if I were lending money out, that would be my taste, is I would want to have some residual coming back in. I feel like it puts a little bit more onus on the borrower to like make sure your
Mhm.
numbers are correct. Like, hey, I gotta factor this in every month. This is part of my holding costs of, I gotta make a payment to the lender. Um,
Yeah.
if I were to go out and get a hard money loan, they're going to require me to make payments every month.
Yeah.
So it puts it a little bit more pressure on, like, I got to get this thing done. I want to make sure that it's done quality so I can sell it. If I'm flipping it, I'm going to sell it, quickly, because there's going to be a lot of people that want this product that I've put out. So that's where I would be at. So I like that you're kind of making that shift towards that.
Yeah. And
Um,
it's easier at 75% of the asset's value. It's easier to convert, like take me out as a private money lender and replace me with hard money too. Like there's just so many more options
yeah,
doing it this way. You're going to get it just I like it a lot better than what I'm doing now.
yeah, yeah. How many people do you have? You mentioned an underwriter. You mentioned you have a VA. What's your team look like right now?
Yeah, so it's just the three of us right now.
Okay.
And we did have a fourth, but she's go off and doing fix and flips in her own area, which is
Okay.
cool to see. But yeah, it's
Yeah.
just the three of us at the moment.
Yeah. I can imagine that this CFO might start to take a little bit more of your time. So maybe a fourth person's going to get added.
Yeah, and really the big reason why I wanted to partner with Alexis and Abraham is because they have the experience. They're going to be able to help us get to where we want to go faster. And I know at some point this new opportunity is going to be more time intensive and take
Yeah.
up a lot more. So being able to make sure that we scale, we do it, we have the systems in place, we stay organized and not create a huge mess like I did when I was doing the BRRRR method, um, and make sure that we can have like SOPs in place so we can bring in more people to essentially automate it. Because if I'm not in it, I don't want my partner to be in it either. But I also want to make sure that everyone's getting served at a very high level.
Yeah. You piqued my interest here with the mess that you created with the Burr method.
Yeah. So, like most visionaries, we just kind of go out, find the next deal, find the next opportunity, and kind of let everything else fall to the wayside, like
Mm,
the books, organizing, all of that, keeping the paperwork where it needs to be. So, yeah, have spent some time and still cleaning up that mess that I made. I got to a bunch of properties, got to a bunch of houses, and really worked out. But also a lot of headaches that came with it.
mm.
Um, so making sure that we don't do the same thing the second time around. But yeah, huge learning experience.
It's funny you say that you let the paperwork and the books fall to the wayside as a CPA.
Yeah, yeah, because it was always find the next deal. That was how I was measuring my
Yeah.
progress. Was am I getting the next deal versus am I getting the right skills? Am I making sure that I'm
Mm,
I'm doing everything the right way?
yeah. Yeah, that's a very as a buyer for sure, especially when you're wholesaling. Like, oh, do I the next contract, the next closing, the next
Yeah,
buyer that you're finding, like, it's just easy to get kind of caught in that cycle and that trap, in a sense. And then when you don't get a deal, maybe a week goes by where you don't get a deal, and now you start to feel down on yourself, and that plays into the
yeah,
next week, and it's just like,
yeah,
oh man. At least that's how it was for me at times, and that's why we got out of wholesaling. Well, that's one of the reasons, just like always chasing the next deal, always chasing the next thing. Yeah, we're still looking for deals, right? We're buying, and I want to buy more deals. I want to be able to pay my team more, but it's a little less stressful now because we're not just like chasing wholesale deals. But
yeah,
that kind
yeah,
of
for sure.
yeah, that kind of segues a little bit, kind of well. You've mentioned some mindset things already with that, learning along the way, learning these lessons, learning these hard lessons, kind of failing, just taking action, bringing people on, in a sense, like who, not how, buying back your time. Are there
Yeah.
any books along these lines, maybe as real estate investor, entrepreneur, or just in general that you've really enjoyed that? you would like to share with the audience here.
Yeah, man, I've gone through like 150 titles in the past 4 years, so there's a lot.
Nice.
So one of the biggest things was Unleash the Power Within by Tony Robbins,
Mm,
and the reason why I like that book is because he helped change my attitude in like such a huge way by changing the word have to get to, right? So I have to go check on a property. I have to go, do manage my property management company. Well, no, I get to, because not
yeah.
everyone gets to be in that spot. Like a powerful quote I heard was, someone in a hospital is wishing that they were in your spot right now. And so that's been really powerful.
Mm,
Atomic Habits is another great one. Helped me get into a workout routine, because I would work out for a while and then I would stop. But if you just do one thing, like I was just doing deadlifts with the bar, nothing else, every single day or every other day, and then that transformed into now a habit. And so Atomic Habits, doing small things and turning into a bigger habit, huge.
mm,
Um, when I was struggling with being unhappy with my situation and where I was going, what I was doing, one of them was at the energy bus. That really helped change my perspective. And then another one was chop wood, carry water, which is a lot of what Pace says is to enjoy the journey and not so much the looking
mm.
forward to the outcome. So chop wood, carry water was a really good one. And then as you get into when you grow and you scale, definitely Who Not How. I'm revisiting that one at this moment. And then 5 Dysfunctions of a Team. I think I listened to that way too early,
Oh,
but that is on my list to revisit now that we are building a growing team.
I love that. I like when there's new ones that come on that I haven't heard before.
Yeah.
Yeah, because I've got a list going of all the books that have been mentioned. I've
Mhm.
said it here probably more times than I should have, but like I wish I had kept track of how many times certain books got mentioned, just to
Oh
see,
yeah.
like Rich Dad Poor Dad 40 times
Yeah.
or whatever.
Mhm.
You mentioned the switching of the words from Tony Robbins, and there's so many little like things that Tony Robbins talks about that are just amazing, but the switching it from have to get to is so powerful. You can
Yeah.
use it for so many different things,
Hmm.
like across your life outside of business and just in your everyday life. It's just those little things where we switch something from negative to positive. It's just
Hmm.
super powerful for our mindset and how we're moving forward. And then what was it, oh yeah, the little habits that you talked about from,
Atomic Habits.
like,
Yeah.
yeah, like
Mhm.
just just making small little changes. It doesn't have to be this huge thing. Like you mentioned, just going out and doing deadlifts. Like, from a fitness perspective, that I could talk about that for a long time, but it's applicable everywhere. Like, do you want to have a better relationship with your significant other? Have a 5-minute conversation every day.
Mhm.
Like, maybe it's gonna be difficult at first, but then you'll get better at it, and it will turn from 5 minutes to 15 minutes, and you're gonna go deeper into things. Like, do you wanna lose weight? Go walk 20 minutes. Do you wanna get better at underwriting deals? Like, just set 10 minutes a day and underwrite deals for 10 minutes. Underwrite a deal. It doesn't have to
Yeah.
be you don't have to go crazy. Like, when we try to set these huge when we would try to make these huge changes, like, oh, I'm going to just add 2 hours in, it's really easy to get, like, maybe you'll do it for a week, but you're going to
Hmm.
get burnt out. You're going to miss doing all these other things that you're not doing now because you've
Yeah.
created this huge time suck out of your day. Make the
Yeah.
small changes and let it grow from there. So I love that you mentioned that. I'm curious about the 5 dysfunctions of a team. That one's not one
Yeah.
that I've heard
So
before.
from what I remember, I listened to it, I think, way before I even had a team, but um, it was like, you want everyone to have conflict, but healthy conflict, because you should
Mm,
be disagreeing to come up with the best solution, and not just say, "Oh yeah, everything's great. We're doing this well." I think it talks a lot about Wells Fargo and how they were able to ride out the. I think they were the only ones that didn't get a bailout, and the reason
oh,
was because they had a strong management team where yes, there was a lot of conflict, there was a lot of headbutting, but it was all like healthy. Like we weren't doing personal attacks. It was everyone's goal is to make sure that this organization is being run at the highest level. And so not everyone's always going to agree, and that's okay. You can still be friends and get along, but you need these disagreements.
Yeah. Yeah, I love that. Like one of our operations manager that we hired darn near a year ago now. That was one thing that set out. I think it was in our first interview that she was like, "I'm not a yes person." We asked the kind of typical like, "What's your strengths? What's your weaknesses?" And
Yeah.
I don't know where she answered that. But she's like, "I'm not a yes man." And thankfully, she was being honest because it had it has turned out to be like sometimes I'll say something, I'll have an idea, and she's like, I don't think so." Oh, okay. Let's poke holes in it. Like, yeah, I need that. Bring me that back down to earth sometimes. Yeah. So if you just have people that are always agreeing with you, you won't see your blind spots. You won't be able to make the changes that need to be made.
Yeah, you need someone to call you out. You need someone to say you're going down the wrong path. You need all these things because if you're never told that you're wrong, I mean, you could be going down the wrong path and you would can make huge mistakes. You need someone to disagree with you
Yeah.
reasonably,
Yeah.
right?
Right. Yeah.
With
Don't
logic
tell
and
me.
points.
Yeah. Right. Yeah. Don't just disagree with me to disagree with
Yeah,
me.
yeah.
Well, I appreciate you, man. I do have one question that I like to ask everybody that's come on networking with Nathaniel. I don't know exactly when I started this, but it's been going for a while now. And it's when your time on this earth is done, you've gone to wherever you believe you go to. What do you want to be remembered for by the people that are left behind?
I think the biggest thing that I want to be remembered for is I did everything, being a husband, being a father, being a
Mm.
son, being a friend, being a business owner, everything the right way. Um, I mean, that's extremely important to me because how my kids view me is how
Mm.
they're going to behave, right? If they know that if they think that I was out there just causing havoc and doing things and hurting people and doing things uh, the wrong way, then they're more prone to do that. And so making sure that they understand that I did my best. I'm not perfect by any means, but that I did everything the right way. Um, so yeah.
Yeah, I love that. It's like Duran Levy came on. Oh, I don't know if that's how you say his name. I think it is Duran Levy. He said, do good business, and I think
Yeah.
that that's applicable. Just like you said, in every aspect. Like, go do your best, put your best foot forward, like have your morals that you adhere to, and put that into everything that you do. And you mentioned your kids, like they're watching,
Yeah.
right? I had
Yeah.
this quote that somebody said. Um, at least early on, the things that kids learn is caught, not taught. And so, like, they're paying attention to what you're doing. They're paying attention to those little atomic habits that you're in, putting into your days. They're paying attention to the way that you're talking to people on the phone and you're talking on Zooms and things like that, and they're catching all of it. And
Yeah.
if you're doing poor, if you're doing bad business, so to speak, they're gonna grow up to think that that's the way business is supposed to be done. That's the way life's supposed to be done. So I love that. Um, I know that you're really focused on Virginia, um, but you're also looking for RV parks. You're also going to start expanding into outside of friends and family at some point here in the somewhat near future. What's the best way for people to get a hold of you? I see you have your IG. Is that the primary avenue for people reaching out to you?
Yeah, Instagram is probably the best way, and then I also have a YouTube channel with a podcast that you're on.
Yeah.
So it's all my socials: Facebook, Instagram, LinkedIn, and YouTube. All have that same Jon Chan REI at the
Nice.
end. I got lucky with that, so
Yeah, yeah.
yeah.
Yeah, I would imagine Jon Chan is a somewhat um popular
Yeah.
combination of names. Yeah.
What's pretty funny is a long time ago when I was in college, I actually met another Jonathan Chan, and my girlfriend at the time, who's not my wife, uh, we had the same name, and our girlfriends had the same name, which I thought was pretty interesting.
Yeah. That could get confusing real fast.
Yeah. Yeah.
Well, I appreciate you, brother. Any parting words for the audience that's here live or in the future?
Yeah, so this journey, it may look like it's easy and that
Mhm.
everyone's doing really, really well, but they're only showing you everything on social media is essentially like a highlight reel. You're going to have good days and you're going to have bad days, and everyone goes through it. So if you're going through one of the bad days, just understand that we're all doing it too. So reach out to me. I'm happy to be your therapist too.
Yeah. I love that. Real estate investor, capital raiser, CFO, CPA, and entrepreneurial therapist.
Yeah, yeah,
Yeah, that's
exactly.
yeah. I appreciate you coming on, brother. If you can hang out, I know you got a busy schedule, but if you can hang out for a couple minutes, I'd love to chat with you afterwards.
Yeah, absolutely. Thanks for having me on.
Thanks for being here. All right, everybody. That was Jon Chan, capital raiser, real estate investor, CFO now. That's awesome. That's pretty exciting and a new venture for him. We talked about private money lending and all the benefits that are there. If you are interested in doing deals in the Virginia area, he's definitely somebody that you should reach out to and connect with. If you're interested in doing deals across the rest of the country, hey, I'm here too. Um, but like he said, we're always here to help. We're always here to help you along the way, get you unstuck. That being said, every Thursday I have Helping Hands Hour. That's Thursdays at noon. If you're interested in joining that, it's just a place where you can come ask questions, network, kind of hang out, and get unstuck in your business. The link to that is in the YouTube description. It's also on nathanielhovsepian.com. Oh, I got to go that way. It's reversed. If you're still here and you haven't hit the like button yet, please like the video. It's how we can reach more people and help them out. If you're not already subscribed, subscribe to the channel. That way you get notifications when we go live. If you're going to be here next